In the second bi-monthly policy review of FY21, the Reserve Bank of India has kept the key policy rates unchanged as per our expectations. Let's do a three-point analysis to find out what this really means for borrowers and see what were the other big announcements made today. 1. What does the status quo policy mean for borrowers and for investors? Now, all the 6 members of the MPC voted unanimously today to keep the repo rate unchanged at 4%, and that is amid the rising inflationary pressures and also a grim economic outlook. While maintaining the accommodative stance, the reverse repo rate remains unchanged at 3.35%. So a status quo on rates could actually be seen as a good news for depositors of fixed deposits, as banks have been continuously cutting the rates on deposits for more than a year now. Some FD tenures now even fetch even lower interest rate than the saving accounts. So there could be a likely pause in the reduction in the FD interest rates. So with no cut in the repo rate, borrowers may also have loans linked to external benchmark, which are likely to continue to pay the same EMI which they used to give before. For new borrowers, this is definitely a good time to take home loan, even if the policy rate is kept at unchanged, because still it is at the lowest level, while availing a loan linked to the external benchmark to compare the spread and the risk premium charged by the banks over and above the external benchmark to get the lowest interest rate for yourself. 2. Debt recast, a fresh lifeline. Well, in a big announcement, which again was on the expected lines by Moneycontrol, the Reserve Bank of India has provided lenders a window to recast the stressed assets, that's without classifying them as non-performing, to ease the COVID-19 impact which was leading to financial stress. Now, the one-time restructuring of loans will be based on the recommendation of the expert committee, which will be steered by KV Kamath. Now, this comes with a condition that the lenders set aside 10% additional provisions on such loans as well. Now, the central bank has also allowed a similar debt recast facility for both personal loans, that's individuals, and also small businesses. Stressed MSME borrowers will be made eligible for restructuring their debt under the existing framework, provided their accounts were already with the lenders and they were classified as standard as on March 1st of 2020. Now, this restructuring will have to be implemented by March 31st of 2021. That is what RBI Governor Shaktikanta said today. Now, the move will provide a breather to liquidity-strapped industries such as real estate and also bring in the much-needed relief to resume operations smoothly hereon. 3. What's the outlook on growth and on inflation? Well, MPC expects headline inflation to remain elevated in Q2 FY21, while it is expected to see an ease in the second half of FY21. Now, the RBI governor said that supply chain disruptions persist, resulting in inflationary pressures, which are evident across the subgroups. Now, the MPC also said that the risks to food inflation remain, and even as it expects favorable food inflation to emerge going ahead from here on. Now, on the economic growth front, RBI Governor Shaktikanta said that India's real gross domestic product will contract in the first half of FY21 as well as for the full financial year. On further policy actions, he clarified that while there is space for further monetary action, but the MPC will be judicious and will watch the inflationary dynamics closely and use the space available only when appropriate.